today's episode, we're going to talk about, I think it's called digitization in the context of the broker and agency. And I think the reason why we came up kind of with this topic is, I think what we see quite often is when we think about digitization, most of us tend to look at it from like a quite a narrow lens. So from what does digitization look like for a carrier? Or what does digitization look like for a broker? And I think we're all missing the whole end-to-end value chain and what's really the benefit for the end customer. And as I said, I'm probably guilty of this myself. I come from a carrier background, so by default, I think carrier first. But as some of you may know, Cytora got acquired by Applied Systems last year. They focus very much on the agencies and the brokers, so they live and breathe kind of the agency and the brokers, and it has been really eye-opening. So what we wanted to do today with all of you is to share a bit more of what have been the lessons learned from working now with Applied and taking also the broker lens. So I'm joined today by Richard Hartley. He's our CEO and the founder of Cytora. Do you want to give a quick introduction?
Yeah, it's great to be here. I think we're now, since the inception of Making Risk Flow, the podcast, I think it's now season 7, which is eight, which is incredible and miraculous. So yeah, we're really excited to be on this episode, and I love the topic because I think when we really think about insurance, it's selling a promise, and which at the point of claim becomes reality. The fact there's a broker, an insurer, reinsurer is just names we've given particular parties in the value chain. But the reality is the customer doesn't think about that when they have a loss and they're hoping that the promise will be fulfilled. So if we really zoom out, that's the unit of abstraction that we're trying to solve, all of us here today.
So you started by saying, touching very briefly on the kind of the acquisition of Cytora by Applied Systems. Should we just give a bit of context on that? Like, what was the strategic rationale before we jump into the actual topic?
Absolutely. So we met Applied, I think, in summer last year. Very advantageously, we were raising our Series C. I think our first impression of Applied and mine, and I know yours, was wonderful people, incredible energy, really strong alignment in terms of their vision and our vision at Cytora to really digitize how risk flows, which really is where the name of this podcast came from. And I think the energy and confidence we had in that vision together and how we could execute on that vision together really was the rationale for the acquisition. A part of that, I think, is Applied has spent 40 years becoming the de facto system for agencies and brokers in North America. I think around 70% of all agencies and brokers use Applied in the US as their core system. So when we at Cytora thought, well, how can we really scale our impact across the full value chain of risk and insurance? We thought joining forces with Applied was really a no-brainer. Tremendously excited to accelerate our mission, and that's really why we ended up joining forces. We're a division within Applied, continuing to provide our platform to all market participants, but obviously we have the benefits of huge acceleration with Applied.
So the acquisition happened last September. I think we've learned a lot about the broker world. Like, when you think about what have we learned about the digitization of risk across the value chain? What would you highlight?
Well, the first thing I would highlight is the domains of the different participants. From the retail agent to the wholesale broker to the insurer to the reinsurance broker to the reinsurer to the retrocession capital are radically different domains. And by domain, I mean the worlds of these people are very, very different. They have different concerns, they have different pain points, they have different systems and languages of actually expressing themselves. And I think in order to solve how risk flows through the value chain, you have to be sympathetic to each of those parts. So Juan and I and our team at Cytora, since we joined Applied, have become a lot more familiar about what the agent and the broker is actually doing. They spend a lot of their time, obviously, with clients. That's really where they get their energy. They're very time poor in terms of actually creating and constructing submissions. When insurers complain about the inaccuracy of the data or the lack of data, that's really because that's a problem also for the agent, having to go to the client and ask them whether the data is correct, whether they're able to get more data. That's also painful and challenging, and it doesn't create value for them. So I think a lot of the problems that insurance companies lament at the point of intake are actually grounded in real problems that the agent has too.
And I think that is all those nuances come into play when you're thinking about how risk gets digitized between brokers and carriers, right? And I think probably a couple of years ago, people would think, okay, to digitize that transfer of risk, okay, all I need to do is take that email submission from the broker, extract the data, evaluate it. And I think it's much more nuanced than that, right? Like, what would you say are the different elements that actually are required to consider when digitizing risk?
Yeah, so I think one aspect that is particularly interesting is we all operate in a crisscrossing set of contexts as people. You know, we're thinking about what session should we go to at this conference. We're thinking, what are we going to have for dinner? We're thinking about what we're going to do for Valentine's, you know, on the 14th of February. So we have these different kind of layers of context and different time horizons, and that's also exactly how I think underwriters ultimately and brokers are operating too. So the broker's kind of thinking, how do I actually send out this submission for a quote? They're thinking, do I have a particular deal with an insurer? Or the insurer might be thinking, I have a particular strategic deal with this broker, which is slightly more medium-term context. For example, they might be doing a book roll or a book transfer for cyber risk. And then they're thinking, well, is this individual risk that I'm working on now part of this overall agreement that I'm doing with Acrisure or Harbor or someone else? They're then thinking about the strategic importance of that particular broker in the context of the entire firm. So maybe you know, the individual risk might not be an appetite, but the overall importance of that broker to the insurer is such that overrides the lack of appetite fit of the individual submission. So you have this crisscrossing intermingling of these different points of context, which means underwriters are really vital to fuse that context together so they can situate the risk submission in that context. The reason I think agentic AI has not been more effective end to end through the workflow is because that context doesn't exist. Even if you've digitized a submission, you still haven't placed it in that prevailing context of the workflow, the firm, and the overall relationship.
So I was bringing that to life, right? So probably you think like, what does the day look like for an underwriter, right? So the underwriter, probably the broker picks up the phone and calls the underwriter and say, hey, I'm planning on remarketing this risk, right? And then they send a first email with some exposure data about the risk, and then a few days later, they said, hey, you've got the loss run here. So there's like a chain of communications that happen to provide just information about the risk. I think that the second dimension you mentioned is then on top of that, there's other context about the risk, which is beyond the risk itself, right? Which is this part of a book roll? And then the actual relationship is there like a strategic plan to strengthen the relationship between the broker and the insurer? So really like, what you're saying is to have agentic underwriting mimic the behavior of an underwriter, you need to be able to have access to all that data, right?
Yes, it's a great way to put it. So as you said, you have the data layer, which is how do I actually unify, piece together the submission data, internal data and external data to effect turn that risk decision ready. That's I think a very important precursor to doing anything. Then you have another dimension, which is the context layer. How do I join together the context in which this risk makes sense? You know, is it in appetite? Do we have a particular agreement with this broker? Are they strategically important? What's my existing relationship? All of those things. How is the portfolio context changing? So you've got these two different dimensions, but then you've got the fact it's dynamic. This isn't like a single point in time. Information's coming in at all points in time. And one of the interesting learnings we've had in the last year is probably 40 to 50% of all risk submissions arrive incomplete. The broker follows up with more information. They'll say, hey, here's a loss run for the aviation submission I sent 2 days ago. So having a purely static approach to receiving and digitizing information is not going to work. And it's orthogonal to actually how the underwriter operates.
Yeah, we were having this debate in a panel discussion this morning, right? Where I think sometimes when we say, okay, AI cannot really underwrite the same way an underwriter does because there's a lot of experience and context. I think we should separate the context from experience to some extent, right? So the context is well, the thing is that broker called you that morning to give you more information about the risk, or similar risk behave that way. I think that is something that AI can have access to, and to some extent you can replace that context. I think there's a second bit, which is like just the gut feeling and experience of the underwriter, which is, let's not call it gut feeling, let's call it experience and knowledge of the underwriter, which is also what AI will learn over time, right?
Yeah, and the interesting thing about kind of, are you able to join together these different kind of layers of context, is they obviously exist in different places. So a lot of the communications that move between the broker and the insurer actually reveal why a particular risk was not written. Was it, out of appetite? Was it unattractive for other reasons? And it's really in that unstructured reasoning that an underwriter will give back to a broker that an agent, an LLM agent, can learn about the reasons why something was the case. And the reasons why tend not always to be obvious, tend not to be linear. It's often we oversimplify these things. We think, okay, well, maybe you couldn't get to an adequate price, or maybe it was out of appetite. The real reasons actually are more nuanced, and they're more the intersection of the technicalities of the risk with the call it the more emotional areas of the relationship with the broker, and the latitude around all of that. So that's really where we're going to get agentic AI becoming more human.
Yeah, I think we see some of our most forward-thinking clients asking for things like, hey, as you're doing risk digitization, can you also do data mining on the Slack communications between the broker and the insurer? And it's exactly to capture some of that other context, right? So do you see that, you talked about those three layers of context, do you see that enduring? Do you see that changing over time?
Yeah, so the one of the things we recently, or not recently, we're kind of way back in time, probably at Cytora, our first partnership was with Excel Catlin back in the day. And I remember one of the learnings I had in that partnership was, I think someone at Excel Catlin said the client never wakes up in the morning thinking about buying insurance. And it's very deep truth. And I'm not saying a risk manager or a very large organization would not think about insurance. Of course they would. But in general, it's a bit different from other industries like banking, for example, where there's a bit more want, a bit more will of the customer ultimately to go and optimize and improve how they're sending money, or that they might open a new bank account, they might have multiple bank accounts. In insurance, people tend not to want to think about risk, and that's normal, simply because people don't want to think about bad things that will happen to them. As humans, we repress, and we try to displace these thoughts. So that means ultimately agencies and brokers, they have to do a lot of sales ultimately to win clients. They have to put a lot of work into building these high trust relationships. That means that the dominant time goes with building the relationship, not gathering the data. Gathering the data is really the derivative of the relationship. And as an agent or broker, you're wanting to do a lot of face-to-face. That's why you'll be walking around, you'll be having in-person meetings. That's why a lot of these risk submissions are handwritten, because you're ultimately having a conversation and then frantically jotting down the information you have about the risk. To grow your agency, it's not easy to grow your agency. So you ultimately have to work extremely hard on winning new clients. That means when existing risks are renewed, often the data can be out of date. That's maybe because the client doesn't respond and say, hey, here's the new information. So it's actually pretty tough as a broker to update information when a client is changing year on year. And that means once the insurer receives a submission, it's going to be highly imperfect, right? And it's going to not be complete, and the information won't always be accurate. I don't think any of that will change, simply because the party upstream doesn't care about the quality of the data. The party downstream does. And that dynamic, I think, is always going to be inherent within insurance.
So to us, agentic AI gets more and more context across those layers you described, right? And then it's able to drive more automation in the underwriting or claims workflow. What do you see? How are kind of clients or insurers thinking about the evolution of the tech stack?
Yeah, so it's an interesting question. I think we're definitely seeing some clear trends emerge that I think are kind of becoming more and more believed and standardized within the industry. I think one of the upfront ideas which is becoming really locked in is meet your distribution partners wherever they want to be met. Don't be dogmatic about how someone should trade with you, and people will always be different. They'll be different because of their temperaments, their demographics, what they find easy, what they find hard. So some brokers will send a handwritten submission. Some brokers will send a very pristine accord form. Some brokers will want to trade via API by default. Others will have a portal. So I think that's one kind of standard that I think is really becoming more and more believed. I think kind of organizations that try and mandate how you should submit information via a portal, or similar to what Lloyd's were doing a couple of years ago, they said, here's a core data record. This is the data we must have. I think these types of approaches are probably not going to be successful, and they're not going to work. And Google would never say you must search for information like this. They'd be very sympathetic to information being misspelled. You could search for a video, you could search for an audio file, doesn't matter to them. That's point number one. I think secondly, agentic automation is superseding the idea of a workbench. So 2 or 3 years ago, workbenches were very exciting for people. We had this idea of like an all singing, all dancing workbench. An underwriter would be in front of it. They would click through on the workflow. It would make them more efficient. The reality with agentic automation is more and more of what the underwriter was doing prior to the really important things is being fully automated. So you're really trying to build much more of a way to orchestrate agents in a headless way, human intervention only where required. And this is going far beyond underwriting. It's in claims, it's in operations, it's in finance, it's in any type of workflow. And you want these agents to have as much context as possible. So cross-workflow intelligence, where an agent who's looking at the context of a new business risk submission maybe can understand the renewal behavior, the claims behavior of similar risks in that cohort. So you really want these agent orchestrations to happen cross workflow and then through the workflow. And the idea of having one workbench for all your underwriters to be in is I think becoming increasingly outdated. I think point number 3 I would say is the decoupling of the volume of risk from your headcount. So one of the clearest business cases is simply say, can we increase the volume of risks that we're seeing quoting and binding with a decreasing number of underwriters? And if you are able to show that, then you're moving towards a more scalable operating model where you can scale the volume of risks that you can process and ultimately make decisions on without having to hire the same number of underwriters, claims handlers, or operations teams. Many of our clients have had great success doing that.
So perhaps there's one quick build on it. The first point you said was about meet the distribution where they want to be met, right? So allow the broker to share with you submissions in whatever format they want. I think one of the trends I think we're seeing there is also decoupling the channel that the broker is using from how you actually underwrite that risk internally, right? So it might mean that they are sending it via an email, but it's a simple risk and you want a straight-through process, or it might be that it comes through the portal, but it's a very complex risk and you want a human to review it. I think probably the industry was in a place a few years ago where the channel dictated the operating model, and I think we see now that kind of that blend of it's really the complexity of the risk what dictates the operating model.
And we're even seeing embedded model where brokers and agencies saying, look, I want you to quote directly in my workflow, so I don't even want to send the submission out to you. I would like you to quote via API directly in my workflow. So it's a really interesting, I think you're absolutely right, channel agnostic, and that's really where insurers can differentiate on how open they are to different channels, how agnostic they are to different types of data, and how creative they can be on how they flex their underwriting workflow to these different forms of distribution.
So obviously one question that comes up, the kind of agentic AI is super exciting. Everybody wants to get their hands on building agents. A question that comes pretty much in every conversation is buy versus build. So what is your view on that?
So my view on build versus buy, I think, is you always want a combination of both, and really, you want to be intentional about what you build and also what you buy. I think what you buy should be things that are available, in the market, things that are kind of core building blocks that you'll need across your business, and areas that you feel ultimately you can build on top of to really differentiate your business. And where we at Cytora obviously have focused is the digitization of the transaction, because we felt that's really a very core building block where you want to turn whatever you receive, and you're absolutely not in control of what you receive. You're going to get submissions, claim submissions, invoices in many different shapes and sizes. But what you can do in our platform is turn that decision ready. So that's a very, I would say, very primitive building block that is going to become a core service across insurance. In terms of how you make decisions on that, how you understand is that the right risk for you, how you price that risk, these are things that are more core. They're more kind of, I would say, company specific. So you're probably not going to find a core service across the market that is great at these things. It's something you should probably build yourself. So I've always felt that's a good way to think about it, as layers of an onion, in which there's really kind of interior things, the things that are very unique to you as an insurer, broker, or reinsurer.
Yeah, you often talk about this concept of buy to build. What do you mean by that?
So yeah, as we've learned, I think in the last few years, really what we are trying to do for our partners and our clients is we're trying to help them accelerate their differentiation. We want them to become more unique, and we want them to feel they can create their own IP with our platform. So we built our platform always with the mentality, which is obviously you're going to partner with us, but you can then you can shape our platform to exactly how you want to, in this case, digitize your workflows. What does that mean? That means it's a self-service platform, i.e., you don't need our help to actually, configure it, operationalize it, and scale it. If you want, you can do that by yourself. You can create your unique view of risk. So in our platform, the way you ultimately digitize information is you create your own data models and your schemas, which turn the data you've received into your view of risk. You can build from our accelerators, but ultimately you can construct your schemas however you want. You can decide which data sources to use to augment the submission information that's extracted. And I think we've always felt that that's a huge selling point, because it resolves the false trade-off of have I brought it or have I built it? And it's more about, is it going to get me to the place I want to go faster, at lower risk, and more effectively? So I think that's a good way to look at them.
And I think we see that quite often, clients coming and saying, well, we've got internal initiatives, but what we want to do is move faster. Like, can you help us move faster? Right?
And you can build anything. So the question is always, like, in my mind, it's not like, can you build it? It's like, can you build it in a time frame that makes sense for you? And if you're an insurance company and you're in 50 different countries, and you have 30 different product lines, and you're trying to digitize your business so you can start to automate the parts that make sense, you're not going to be able to build that in 3 years, and that's really the question. So I think it's always good to reserve the optionality to build where that makes sense. You never have to make these decisions in a final way. But if you want to get to where you want to get faster, you still want to have control, but you want to reduce the risk of a deployment not working. I think partnering with the right companies are always a good way to go.
So also one last question before we wrap up. If you could like fast forward to the end of 2026, what would you say is going to look different than the beginning of 2026?
So a big area of focus, I think, for us is really solving digitization in the context of how the value chain operates, which I think is particularly exciting. And we're obviously on a path to soon releasing a big new feature of our platform, which will enable a dynamic view of risk as every new piece of information across any workflow is updated. That's very exciting. That ability to link context, create context across many different internal, external submission pieces of submission information will, I think, enable much more progress through the end-to-end workflow. I think a lot of carriers right now are saying, well, I've digitized my intake, but now I'm really trying to execute an end-to-end workflow agentically. The reason they can't do that today is because they might have digitized a submission, but they haven't actually digitized the context that the underwriter very natively holds in their head or the claims handler holds in their head. So that's going to be a massive unlock, I think, to really the acceleration of value creation in AI.
Thank you so much, Richard, for joining me. Hopefully, all of you have enjoyed the discussion too. As I said, check out the other episodes if you haven't listened to them. Fantastic guests in those episodes. And thank you so much.
Thank you.